Hello, Maverick Traders. It is August 1st. It's a Thursday. It's Joe. I'm back from vacation on the first of the month, getting into the last, I guess, this is the last month of summer. And boy, have these markets been pretty exciting. Let's get into it. I've got my 2 cents. You guys know how this works. Takes responsibility for the outcome and make sure you follow your own trading plan. I'm going to break down the markets when it comes to any news of the day, and there's been a lot. We got a lot of earnings going on. We're going to break it down as well technically and share trades with the community as always.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the markets, you can see that, hey, a little bit of a breakdown. Let's get straight into the news of the day. The U.S. market sell-off after the FOMC keeps rates unchanged. The expectations were for that. Powell comes out and says that, hey, you know what? Inflation is kind of where it's at. The economy is way too strong for him to cut rates, but it's not weak enough for them to raise rates. So he's just going to sit back and see how some of the stuff plays out. We have seen a little bit of interesting things in the economic news. I'm going to get there here in a second, where we are seeing a little bit of weakness, which has caused a little bit of disparity. However, I'm going to chalk it up, folks, to what I'm seeing. This is seriously just a round of profit taking. We got to follow the charts. I'll show you a couple of examples. The Bank of England cuts rates by 25 basis points. It was expected. And the pound, or the sterling itself, actually started to slide. It slid pretty aggressively. Cutting rates by anyone is a sign of expected weakness moving forward. So it should be interpreted as negative, which is why I think the sterling slid as much as it did. Now, when we take a look at the chart here, folks, it's not falling apart. It's still super strong. It's just a pretty aggressive reaction and probably something not ready to buy against just yet. We got to follow the pattern itself. So let's move on. You could see the yen continues to move higher. The U.S. kind of flat today. Franc strong. So the strength that we've seen over the last little bit has stayed there. Euro slid a little bit. Pound, you can see down 0.74. When I did this class, it might be somewhere around that area. But it's just because they had a rate cut, right? You cut by 25 basis points, your currency is not going to be stronger compared to others. The CAD's holding in there a little bit, but it slid. Aussie as well. And the New Zealand dollar staying flat. Moving over to the rest of the markets, another 1.37% down on the SPX. We saw the Dow itself was down about 700 points. So this was an expected, I shouldn't say expected, but the markets were set up as into a bear rally if you guys are following them as well. So sentiment is just, hey, let's take some profit. I'm not going to say it's bearish, but we had a pretty good little bounce after yesterday's little move. But I think these markets were waiting for that bounce to actually sell into. And what I mean by sell into, folks, is actually take profits. This is by no means the end of the world or the beginning of a bear market. It is literally just the ability to actually take some profits off some of those high flyers. The world index down 1.81%. Crypto pretty much down. It was by far the weakest, 3.14%, but we should expect that, right? It's the most volatile. Gold down a little bit and oil as well. So it was a general sell-off across everything. Let's get straight into the cryptos, and you can see all of them down, 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 down. And whatever was the strongest was probably going to be the weakest. Litecoin we've seen for a while as the outperformer of all the currencies. So it just got, I refer to it as taxed the most. And what I mean by taxed, folks, is you've got a lot of traders out there, a lot of hedge fund managers and things that have a lot of profits in some of these higher flyers. That's where they're going to hit the cash register first. So some of the things that extend the most are going to come back the most. We refer to it here as the rubber band theory at Maverick. So the further you stretch that rubber band, the harder it's going to snap back. Now, this does not mean it changes momentum or bearish or goes from bullish to bearish. It just means, hey, that's kind of the reaction of the push and pull. So where are we at? Not a lot changed with the pattern, but the candlestick really did kind of give you something to scratch your head at. So overall, folks, I'm going to give you this. We are below the 20-day moving average. We're on the 50-day moving average. It's interesting that the S&P here itself actually closed on it. A little bit of increase in volume. We'll get in the chart here in a second, but the 20-50 slope is a little bit off. The 50 is kind of sloping or turning flat, but the 20 is down. I moved it to a -1, and you could have the argument of a -1.5 or -2, but it didn't close below the 50. And based on the pattern here, let's jump in and take a look at it. It is still definitely glass half full. I know, folks, it doesn't feel like it, but it truly is. And what I'm focusing on is primarily this support level that we saw after a gap up in early June. If you want to go a little bit further and kind of use these areas of resistance, I'll draw two of them here because it did consolidate here. Understand, folks, that we're not talking about a specific price point. We never do. It's kind of an area. It's still super healthy. Now, yeah, over the last day or so, we've had a little bit of an increase in volume with a big, large candle that could be scary. But where we closed is pretty optimistic. Now, we could pull back to this area. We could pull back to the other one and still be in an overall uptrend. We have the crossover that happened here. This 20-day is flattening, but it's not necessarily this catastrophic sell-off that I've talked to some of my bears about. It's just basically a pretty aggressive pullback. I refer to as, let's take some profits and put it into something that is emerging or coming off the low. As far as the economic news goes, we have had some pretty interesting things come across the board, and I think it adds to a little bit of the skepticism or pessimism, or I shouldn't say pessimism, but a little bit of, hey, this actually pushes me to take some profits in some of these stocks. We had the ADP employment down a little bit, so not adding a lot of jobs, signaling a slowdown. We did have a very strong GDP number in the U.S. Coming into the official bank rate statement of the Great British Pound. They were going to drop 25 basis points, which they did, and they didn't really say anything about future cuts or any of that, but it, in my eyes, seemed like it slipped a lot further than I would expect it to, especially when they did exactly what they would say they did. The unemployment claims did tick higher as well as the manufacturing PMI. Now, these are lesser reports when it comes to the direct impact that it has on the markets. I know that the unemployment claims, if they're way off, can be pretty big, but we're seeing a slight uptick in unemployment and a slowdown in manufacturing PMI, which could signal, hey, a little bit of weakness coming. But guys, I don't really want to speculate too much. It's seriously, these markets were on their way into correction mode, and that's about where I'm going to leave it. We need to chart and move forward. So what do we got left? Well, we got the CPI for the Swiss franc, and then non-farm unemployment change for the US dollar. That's it. Not much going on into the weekend. So we got to actually put a lot of more emphasis on the charts, support, resistance, and the trends themselves. So let's jump into a quick currency analysis. I'm going to break it out here and let's take a look at some that are pretty interesting. Let's move over to the yen because this is definitely the strongest, and I absolutely love this chart. I'm going to start on the 4-hour chart, folks, because that's where we do our top-down analysis, and this is where we get our changes or outlooks. But I just love this pattern. A little bit of an ascending triangle pattern going on. We've seen some emergence in strength for quite some time, but I just like how this is kind of leaking forward. This is definitely a currency you want to buy against others. Now, what's tough that I found, and once again, I just got back from vacation, so I'm doing this fresh as well. It's very difficult for me to find something that's not so beat down that everything's not overextended. Let's continue with our top down. So here's the yen. Let's take a look at the US dollar. This is also on a 4-hour chart. This is something that's showing a little bit more of a bear rally. We're below the 13. Parabolic SARs have switched, and we got a flattening RSI. So I'm going to probably keep this at maybe a slight negative or zero. Not a lot to go off on that. Let's move to the Swissy. Nice ascending triangle breakout here. It looks like it did pop up along with the yen there. So we got a flip-flop. We got above the SARs. We got above the 13, and the price action itself looks good. Definitely the strongest of the two. The strongest of the currencies. So the only two that I'm seeing a lot of outperformance in as of late is going to be the yen and the franc. It just depends on what we pair it with, which is becoming increasingly difficult as we move over to the euro here, because a lot of these currencies are showing a little bit of corrective action, or they might be a little bit overextended to the downside. So here's the euro. We're below the 13. We're sliding below the SAR. We've got a rising RSI. So this is going to be a -2 or -1, -2, but maybe something that we can use. The the pound itself, and here's the slide. I'm going to show you this on two different time frames because you can see there's a little bit of an uptick in the RSI in the 4 hour, a little bit of a hesitation after a slide, but it is below the SAR, it's below the 13. But if you look at the daily, and I'm going to try to squish this down so you guys can see it, and take a look at the longer term, it's still technically in a slight uptrend. It's a very aggressive corrective move, but this is something that I wouldn't flip around and try to short aggressively. We wanted to see this thing pivot. We thought with a good reaction to the announcement, this thing would do so. It hasn't yet, but it doesn't mean it won't. Let me draw a line here so you guys can see it. But there is definitely some good lines of support throughout this area, right? We got a support here as well. And these things can flip pretty quickly. We still have a pretty decent uptrend, even if I was to put it at where it hesitated today. It's not to say that this thing isn't going to roll over and fall apart, but if it can establish a pivot point here and start to move higher, this still has a chance to be one of those +1, +2 currencies that we can actually pair with something stronger. They did cut rates. It does weaken the currency, but overall, as far as currencies go, in the longer term, this thing's been an outperformer for quite some time. Let's move over to the CAD. You can see the CAD is actually starting to slide a little bit lower. It's below its moving average. The 13 EMA, flip the SAR, and the RSI looks like it's flattening. So this is definitely going to be a -2, -3 scenario. I guess what I'm trying to say here, folks, is the trend overall is we've got a lot of sentiment here willing to hit the cash register, get out of things. We got a rotation going on. Rob refers to it as the great rotation on the equity side, folks. I mean, it's a fun thing to say, but it's the truth. We're seeing a lot of these outperformers being cashed in, not beat down, but cashed in. And when you cash out of some of these extended stocks, they look like they're falling apart, but they're not. It's just a rotation from some strength into some of the stocks that are a little bit more defensive. Now, folks, we refer to this on the FX side as risk on, risk off. We're definitely seeing a huge move into the risk off and out of the risk on, right? That's why the currencies are falling apart. We're seeing a good move into the franc. We're seeing a good move into the yen. Don't overthink it, folks. Sometimes we get too smart for ourselves. Speaking of risk on, let's move into the Aussie. You can see that it's actually been falling and falling and falling. There's nothing economically wrong with it. It's just people pulling out of the risk on scenario. RSI flat. We got below the parabolic SARs and breaking below that 13-day moving average at support. So this is definitely sliding to the bear side. And let's take a look at the New Zealand dollar. It looks like it's having a little bit of a bounce, right? This is a bear rally. It's still below that 13. We had a flip on the SARs, but we have a flattening and rolling over 13. So this is still definitely bearish as well. So not a lot going on when it comes to the overall motion of the ocean of things. I truly believe that we're seeing sentiment trying to take some money off of the table. So where does that leave us from yesterday? Not much has changed, honestly. I think the biggest move is going to be the pound sliding a little bit lower. I'm not sure if it was at -1 or -2, but it did slide lower. And the only reason is because it broke some support levels. It's just, it cuts its interest rates. It's going to be weaker against other currencies. And so far it is actually sliding. I still believe it can set a support level and maybe turn around, especially if we see weakening currencies moving forward. If the euro gets weaker, the dollar gets weaker, all of that stuff. Definitely a move to safety. We've seen the yen and the franc do pretty well, and they're going to continue to do well, but I'm starting to see too much variance. So if you guys take a look at how wide, I'm going to go from 0 all the way to here and 0 all the way to there. There's not much for us to do because we're doing the extreme strength to the extreme weakness. And when I pull these up, I'm going to show you a couple that just for an example, they're already way overextended. So we need to see some sort of corrective action for me to at least get the probabilities in getting to some of these trades up or down. We do have some stuff like the US dollar, New Zealand yen. They're kind of floating around, but we'll see where they go. So what are the possible trades? Well, let's go take a look at them because there's none I like, to be honest. So what I like to do is just jump into the currency that moved the most today. That was obviously the pound. So let's go through some of those pound crosses. This is the pound franc. Let's bump over to the 4 hour to see. You can see it's actually slid a little bit more. It's kind of extended, but if you take a look at that daily chart, it looks like it has just broke this support level. Let me get a line up here for you guys so you can see it. right through here. It does look a little bit overextended. We have the RSI a little bit lower. It looks like it wants to bounce. So if you want to be patient on it, see if it can't get back up to this level here. I could draw that line a little bit lower and then see if it can't roll over. But this could be something in the future. And that's kind of what I've seen. I've got a lot of trades here that they match, but they're just a little bit overextended. So I'm going to keep them on my watch list more so than trying to jump into them right now. But the pound franc is a good one. This is on the daily. Let me go back to the 4 hour to make it a little bit more relevant. Let me erase my lines as well. You can see that it does feel a little bit overextended. So what I'm looking for on this, if you're doing something off that 4 hour, which is what we do with the relative strength and weakness, I'm going to look for a rally back up to this area, which means we got to flip that SAR, definitely, and maybe even retrace that 13-day moving average. But if I see any sort of hesitation here, keep an eye on this RSI. If it can stay somewhere in this level before it rolls over, might be an opportunity. Unfortunately, folks, I'm talking about something that could take days to do. Just be patient. The volatility in these markets right now is pretty outstanding. It's impressive. So let's also take a look at the yen, because it is the other strong currency against the weak currency here in the pound. Bounce it straight over to a 4 hour chart, and you can see it's in the same situation. This one's actually looking a little bit weaker. Out of the two, I believe that the yen pound is going to be the most diverse, because that flight to safety on the yen is pretty aggressive. But it does still need a corrective action or a bounce or a rally. So there's not a whole heck of a lot that I'm actually pretty interested in, especially from yesterday to today. Yesterday we had just the opposite. Big move to the upside in the U.S. equities. A lot of things were kind of coming off the bottom, and then today is just that flip around. So we just kind of have to let that volatility play itself out and be patient. Let's take a look at the Aussie pairings between the two. First off, with the Aussie yen, kind of the same situation, the same boat here. Let's take a look at the daily. Yeah, these things just really just continue to flip-flop, and it becomes very difficult when you have a sentiment that really just kind of wants to jump out of risk on and go into risk off. We kind of have to wait for it to bounce before we can actually jump into it as well. The last one to pair that with would be the franc, and as you'll see, it is similar. This actually has a little bit of more of a support level here on the daily, but if you take a look at the 4 hour chart, this seems to just be kind of melting away. So I'm fine with kind of adding into momentum. If you want to get into some bear stuff, you can play something that's kind of slightly lower, use your stops, because I imagine this is going to continue to take these directions. However, if you feel that these are overextended, make sure you follow your plan, stay out of it, wait for the corrective action, and we could do something in the next couple of days or even next week. So as you can tell, folks, I'm really not looking to do much here. And a lot of that has to do because I just came back from vacation. That's how I kind of do it. I like to come back from vacation, scan fresh, take a look at where the markets have been, and look at it with a fresh set of eyes. And based on the volatility that I've seen, I just see a market overall. And I do a lot with the equities, but currencies as well. I'm just seeing a lot of moves off of, hey, the high flyers, let's take some profit. Even with the currencies, I'm seeing a lot of move out of the risk on and into the risk off. Look at that, the franc and the yen +3. I mean, it's obvious. So let's just be patient with it. Let's make sure that we wait for to give us a setup that gives us the probabilities. There's no reason to try to fight or get into this volatility. It's best to sit back and do something a little bit more realistic. So corrective action continues in the U.S. markets. I'm seeing it in currencies as well. The sterling slide after rate cut. Volatility remains high. If you don't like volatility, don't play it. We're not missing anything here, folks. Let's let this rotation continue and see if we can't find something a little bit more stable. Play the relative strength and weakness and proper position sizing. Follow your plan. You guys get it. Thanks for joining me. We'll talk to you next time. Bye, folks.